Hey guys, this is Rudy coming at you live from Palm Beach in Florida. It is Sunday. It is March the 5th. And of course, we're heading in close to the end of the third quarter. So we're in the midst of the earnings season as well. So it's been interesting to see the companies reporting. Most of the companies have reported positive earnings, which kind of makes the idea that we might be going into a deep recession look less likely. And that's probably good news for everyone, not only in the United States, but worldwide. Because, you know, the old cliches, when the United States sneezes, the rest of the world catches a cold. I was on Twitter this morning, and as I usually am on Sunday morning, kind of checking things out. And I saw some interesting comparisons about Petrobras and Chevron. So I thought, you know what, let's put this into sort of perspective and share something with you that might be of interest to you. Now, obviously, I've made many videos on Petrobras, and as many of you know, I no longer have a long position in Petrobras. I do not have a direct long position in Chevron either, but I do own XLE, and approximately 20% of XLE's holdings are in Chevron. Another 20% is in Exxon, and then the rest are in some super duper energy companies in the United States. Anyway, this guy, Marhelm, I don't follow him on Twitter, maybe I will, made a comparison between Petrobras and Chevron, and you're saying net income 36 billion to 36 billion, dividends $5.78, $5.70, market cap 69 billion versus 314 billion. That's a huge shift. I mean, a huge difference or delta between the two. ROE, I'll come back to that one in just a second. This may be the greatest divergence in the valuation of large cap companies in the history of financial markets. It's an interesting comment. I have said on several occasions that Petrobras is the cheapest super major you can buy right now. I still maintain that position. The fact that I'm no longer long in Petrobras doesn't mean I dislike it. There are things about it I might dislike, like the geopolitical risk. But in the essence of transparency and fairness, I still hold the position that Petrobras is the cheapest super major energy company that you can buy right now. Someone questioned Marhelm about the debt. He said debt is peanuts. They can pay off the entirety of the debt with 6 months of cash flows. There's no question that Petrobras is undervalued, and it's literally printing money hand over fist. You can buy Petrobras for about $11 a share. It's sitting just left of center on its 52-week grid in terms of high and low. Comparatively, you can buy Chevron at around $160 per share, and it's sitting just right of center on its 52-week range. Not a lot to choose between the two here. Obviously, you can say, well, I can get many more shares for $11 than what I could get for $164, depending on how much cash you have available. But remember, the share price does not indicate the actual value of the company. The market cap does. And this is where you can start seeing how undervalued Petrobras actually is. Because on the Twitter slide I just shared with you a minute ago, you can see that they are sort of much of a muchness. In fact, they also have almost the same number of employees globally, which I think is about 42 or 45,000 or so. So they're very, very similar. The market cap, though, is $72 for Petrobras. Petrobras is on the left. Chevron is on the right. Chevron has a market cap of $314 billion. Earnings per share, both positive, decent from Petrobras, $5.56. Exceptionally good from Chevron, $18.26. This is trading 12 months. And then the PE ratio, obviously, this is what gives you an indication as to how cheap the stock is or otherwise. Just sort of as a snapshot. 2 is ridiculously cheap. That's also why you have a stock that you can buy for about $11. And 9 is also relatively cheap. The S&P 500's average is just below 15. So 9 is a pretty good buy as well. Annual dividend yield is ridiculous for Petrobras. This is an $11 stock that's currently paying out about $7.50. Comparatively, Chevron is much more sort of, shall we say, realistic, with a $6 dividend on a $160 stock that's yielding approximately 3.6. Short interest, nobody really thinks these companies are going to pull back. So Petrobras, even though its short interest is more than 2 times the size of Chevron, it's only 1.46. That's a percentage of the total float that is outstanding. Now, if we do a valuation analysis here, and what I'm going to do is just go relatively quickly through these because there are some things we can ignore and some things that we should look at. Petrobras, of course, is in the oil, gas, and consumables fuel industry, and because it has positive earnings, the only two metrics we should really look at here is price earnings and price to book. The difference between the two is quite fundamental because price earnings is based on the trailing 12 months, TTM, and price to book is usually based on the last quarter, so most recent quarter. The blue rectangle on the right-hand side is going to be Chevron, and the data embedded here next to it to the left of the blue block is Petrobras, so PBR and then Chevron. Chevron is going to be on the right every time. Price earnings ratio, as I mentioned, 2 compared to 9, both pretty good. Petrobras ridiculously cheap, and price to book 1 to 2. So both of them are fair value or undervalued based on those two particular benchmarks. Profitability. So what I'm looking at here is gross profit margin, operating profit margin, and net profit margin, TTM, so trailing 12 months for the past year. Petrobras easily shadows CVX in terms of outperforming them. So gross profit margin 48 to 38, operating profit margin 45 to only 17, and the net profit margin at Petrobras 2 times that of Chevron. By the way, when I say geopolitical risk, I'm not ignoring the Biden factor in the United States, because Chevron, of course, is an American company. The current administration is throwing everything that they have in the kitchen sink at energy companies in order to try and squish them and hold them down. It's not working because the demand versus supply curve favors energy investors anyway. Petrobras's dividend is not sustainable, so says TD Ameritrade. Over the past 12 months, the company paid more in dividends than it earned. If you look at the annual dividend yield, as I said, this is absolutely extraordinary, or you could even call it ridiculous if you want. Only 2 things can happen here. Either they cut the dividend and make it more reasonable in relation to the stock price, or otherwise what they do is they watch the stock price just soar to $150 a share, making the dividend look reasonable as a percentage of the share price in terms of yield. But I'm not sure it can be sustained just as it is today and has been for the past couple of years. And by the way, I have profited handsomely from my position in Petrobras. Not only did I take profit when I sold it, but I also had been collecting the extraordinary high dividend for the past couple of years or so that I owned it. The dividend change, once again, Petrobras is it's just crazy. It's off the charts, right? If you're buying something because you want a dividend, Petrobras is your stock. Whether the dividend is going to be maintained or not, whether President Lula and his new appointee for CEO of Petrobras is going to, maintain that, I don't know. I'm not sure. I can't predict these things. Nobody can. Earnings growth at Petrobras outpaced revenue growth over the trailing 12 months. This is not sustainable. If we look at the EPS growth, so earnings per share growth for the most recent quarter, that's okay, but it's better to look at it for a trailing 12-month period because it gives you a better indication. And you can see the earnings per share growth of Petrobras has been pretty good, but Chevron has actually outperformed Petrobras on an earnings per share basis for the trailing 12 months. Same with revenue at the bottom. You can't really look at the quarter. Obviously, during the quarter, the prices fluctuate quite significantly. But if you look at the revenue growth over a trailing 12-month period, Petrobras has done okay, 41%, and Chevron 51%. So slight edge here to Chevron in this regard in terms of where we are at. On the industry number, in case this looks confusing down here, 4,000%. Just keep in mind that the oil and gas and consumable fuels industry includes many microcaps that just exploded with the high energy prices that we've had over the last couple of years. We look at the effectiveness of the 2 companies, and we're looking at the return on equity assets and investments for the trailing 12 months. Once again, Petrobras is outperforming Chevron, not only on equity, but also on assets and on investments. In every one of those metrics, the performance of Petrobras is better than that of Chevron. The revenue per employee, in fact, Chevron has 2 times greater revenue per employee than Petrobras. And as I said earlier on at the beginning, they have about the same number of employees. So in that particular metric, Chevron has a slight edge. Financial strength, you guys know, I always look at the debt of the companies. Total debt to capital for the most recent quarter. Petrobras, 43%. Now, as the guy on Twitter said at the beginning that I shared with you, they could probably settle the entire debt with 6 months worth of cash flow. That, of course, in theory would be true in terms of numbers, but it's not true in terms of business, because you have a business to run and you can't use all your cash flow just to service your debt. Chevron, on the other hand, has a debt to capital ratio of only 12%, which is about a third of the industry. So Chevron's in a pretty good position when you look at the debt to capital ratio. Also, the quick ratio at the bottom. Petrobras, in theory, regardless of the fact that they are printing money, Petrobras doesn't have enough cash in the bank. Quick ratio is cash versus current liabilities, to settle those current liabilities immediately or within the next 30 days or so. But of course, Petrobras is making tons of money every single day, so it's not really a concern, and it's not way below 1 or even negative. It's it's a positive number, and it's relatively close to 1, so it's okay. Chevron, on the other hand, has no problem whatsoever. They have a very solid balance sheet and a current quick ratio of 1.23, so greater than 1, comfortably greater than 1. So they would have no problem paying their debt. So that's kind of like a quick snapshot overview of Petrobras versus Chevron. Now, as I said at the beginning, I do not own Petrobras right now, and I own Chevron indirectly through my XLE holding, which actually right now is my largest energy holding overall. In other words, in terms of all the energy stocks that I have in my portfolio, XLE is easily the greatest. So that's a wrap on that one. You guys can let me know. Obviously, I know many of you are still long on Petrobras. There's nothing really wrong with it. If you say, why is Petrobras so insanely cheap compared to, in this particular instance, Chevron? I would say it's almost entirely based on geopolitical risk, and specifically risk related to Lula. It's early days yet. He's now been president for only 6 months or so. So, on one hand, you could say, let's give him a chance. On the other hand, you can say, well, we saw what he did before, and also what he said in the run-up to the election. Many times politicians say a lot of stuff to get elected, and then once they are elected, they do not execute and follow through on whatever it was that they said in order to get elected. Lula's track record, especially as it relates to Petrobras, I have no opinion in terms of his performance politically, but as it relates to Petrobras, I have done analyses before that I have also shared on this channel, how well Petrobras did under Lula's previous tenure when he was president, going back about 20 years or so. So guys, that's a wrap. In the next video, I'm going to share with you a new pick that I found, not by chance. As usual, all the good stuff comes from the channel. So keep watching, keep commenting. Let's interact and see if we can help one another find that proverbial diamond in the rough. So that's me wrapping up for now. Take care, and I will be back soon with more. Bye-bye.